Good afternoon, guys. Brett Burns here. Thank you for joining today's live. So today I wanted to talk on real estate investing, something that's near and dear to my heart. Personally, I've done it for about 20 years now. Have a lot of clients I help with it as well, and it's something that's been a fun way to tie into, of course, mortgage that I do day to day, but my personal investment strategy. And I've helped a lot of clients and seen a lot of clients gain some great wealth over the years. So a few things I wanted to chat on for you. So obviously today, a kind of brief live event, so we can always dive into details and strategies more in depth, but a few things today, some of the fundamentals around it. So you got to have strategic planning. Buying a rental seems simple in one sense, but there's got to be a plan behind it, guys. So we can talk on some of that. The second piece, really dial in the financing. At the end of the day, I had lunch with a great investor once, and he mentioned real estate doesn't work without financing. The mindset of, hey, like that's part of the benefit. I think oftentimes we can think of loans as negative. Hey, maybe I just pay things all cash. One, realistic, that'd be very hard to do in today's marketplace with prices. But secondly, having that financing and the leverage actually is one of the number one appeals to real estate because we get leveraged return, making it way more strong on our cash to cash returns. So, and the third piece is, kind of tying into this, how do we maximize our returns over time? There's multiple ways to measure that for us. So, within this, guys, you always want to leverage professionals. So you have someone like myself on the mortgage end. You're going to have a real estate professional helping you with the shop and find the homes. You may have a property manager potentially working with you. Definitely, tax accountants helping you on the write-off standpoint or how to claim it tax-wise. So a lot of different, professionals that can come into play to help you guys build out this strategy for us. So let's talk briefly on some of the why. So some of the big things around why I like real estate investment. Number one, the asset appreciation. Everybody here that's either owned a home or knows someone that owned a home, if you look back 10 years, 20 years, 30 years, there's a massive change in price. And that's just typical, inflation over time. Things get more expensive, and really supply and demand. We got to think homes are being built, but the number of people that are being born, in a sense, our population growth is significantly larger. So that's why real estate continues to move up, especially in the key areas. They can't build more homes there, guys. There's just nowhere to build, right? So I love that mindset of, hey, we know it's going to go up. Yes, over time, we've seen the dips, but even you look at a massive, crazy kind of once in a lifetime event, property values came down. Every single person that held that property, we're still way, way above that today. So that's first piece is awesome asset appreciation. Hey, the second one for us, cash flow generation. It's pretty awesome to think about, hey, things are gaining, kind of like a stock. Hey, we're gaining value in the market, right? But we're also getting cash flow per month. Now that can be used simply to just offset our debt, and increase that leverage, or it can be used for, actual income coming in. So I know for a lot of folks, myself included, there will be a stage where my rental portfolio is paid off and that cash flow is coming in to live off of as well. So that's another awesome piece is cash flow. The third piece, tax advantage. Probably one of my favorite aspects for us is there is a lot of federal tax incentives around real estate. So whether that's simply depreciation, being able to take a huge paper loss. Ironically, the IRS lets us depreciate an appreciating asset. Pretty backwards, but an awesome advantage. So there's so many folks where you'll see, hey, a client's making money every month, every year on this cash flow. They're bringing in that rental income. Yet after expense write-off and depreciation, they're showing a net loss on paper. So from a tax perspective, that's actually helping them reduce taxes in addition to not paying tax on that actual rental income. So that's a huge aspect, guys. When you really think about growth over time, the number one expense we all face in life, taxes. So when there is a way the IRS is incenting folks to get into real estate, help to build real estate, manage real estate, own it, whatever it may be, that is a massive advantage to say, hey, we get some key tax write-offs. Now, those can all vary a little bit differently on your individual scenario, hence where a tax professional comes in, but it's a huge opportunity. And the fourth one, guys, portfolio diversification. For anybody out there, we've all heard allocating our assets a little bit differently. Say we don't want to be 100% in stocks. Well, where else do we invest? Well, real estate can be an amazing one for us. So those are a few kind of the four pieces I look at to say, hey, why is real estate investing appealing to me? So there's some key pieces. Ultimately, guys, how do we kind of build our plan? So the first piece I like to tell most clients is we got to set a strategy. Now, I'm talking very vague here, or wide, I should say, on real estate. Well, that could be anything: single family homes, multifamily homes. That could be retail. That could be, commercial buildings. That could be, land. I mean, there's so many different things within real estate. Now, all those in their own right can be awesome. But I would say it's very easy to get mixed up with too many things. You want to find a key one for you and become more of an expert at it. Now, it doesn't mean it can't shift over time. Like me personally, I did a lot of single family homes because I knew those well. I financed those all day long. But now, the last few years, I've really migrated to a lot of multifamily, 4-unit, 8-unit, 10-unit style properties. And then again, maybe there'll be a migration later. But I think up front, it's key to say, what's the niche in the market I want to focus on, learn a lot about it, and then really be the expert in that niche. So I would say that's the first piece, is narrowing in what is your strategy. Now, within that, we just mentioned property type. The next could be, well, what's my timeline look like? Different folks have different strategies. Some guys are flippers. I want to buy these things, flip them. Mine is a long-term hold strategy. Hey, I want to buy these things, let them appreciate. I'll go into the property, update the renters, update the property, gross the rents higher, but I want to keep these long-term. So again, not one is always right or wrong, but I think it's key to say, hey, what's the property type? How long do I want to hold it? What are my strategies? So that's going to be a big one, is kind of narrowing in on that. And again, lean on experts, guys, to help you find advice for your particular goals, which strategy may be the best for you. Number two, or I guess I talked about number two would be, is the property selection within that strategy, to say, okay, hey, if I'm long-term, short-term, flip, hold, fix or buy turnkey, all those strategies. Now, what properties within that strategy do I want? The third piece, guys, is how are we going to finance this or build it? Now, this is a key piece, of course, to say is, hey, depending on the loan type, if I'm buying, commercial buildings, it's a completely different style loan than if I'm buying single family homes. So again, it's going to be important as you narrow that strategy. And now you can say, hey, what's the proper avenue to finance? Now, within this, there's other tactics or mindsets for clients. I will say one thing I see for a lot of clients that sometimes can be, a little bit of a mental roadblock, is purely looking at cash flow. So for example, somebody might look at a deal and say, well, technically the mortgage today on this would be $3,000 and the rent's, $2,800. Well, I'd actually be losing $200 a month. So this is a bad investment. I wouldn't agree with that just based on that. So for example, guys, we got to look at what's our goal, long-term gain. So for me personally, I have bought multiple properties where at the moment, the cash flow is slightly negative. Here's how I approach it. I had one where I was negative $400 a month out of the gates. In that for us, since then, I have done a couple small updates to the property. I have rolled the tenants over, grossed it up, and I am positive. In addition, as rates come down, I will refinance and I will be more positive. But even before that, guys, the number one reason I did it was the price I could pay today, because other investors were not willing to buy it because of the quote negative cash flow, was significantly lower. So how I looked at that was, hey, if I am paying $400 loss a month, hypothetically, that's just like, what if I was putting $400 into a stock account? It's just $400 out of my pocket. Don't think of it as a loss, guys. This is an investment. I'm putting $400 into this monthly to grow something long-term. So for me, that was $4,800 a year. Now, honestly, once I factor in my tax advantage and the depreciation, I'm not actually net losing anything because I get to pick it up. But even with that, if I'm paying $4,800 a year, let's say I do that for 2 years, $9,600, just under $10K of cash out that I've invested. But I think I got that property for 50 grand lower. That is an awesome investment, right? I potentially locked this property in 50 grand lower than what normal pricing would be because of an inflated market and interest rates and pushing price down and not as many investors wanting to buy. So I say this story, guys, is there's a lot of levels to look at it. My goal on this one was not looking at $200 or $300 a month, but was looking, hey, if I'm locking this price in 50, 60, 100 grand better than what I could, that is a major savings and a good long-term investment. Now, ironically, again, that cash flow today is positive. You got to think about, hey, what things can I do in the road? What is my 2 or 3 or 5 year picture? So one, locking that pricing was huge for me. That was immediate savings I will see down the road. But second was, I know rates will cycle and I'll refi. I know over time I will bump those rents on those tenants and do some improvements and things will go up. So very soon I will cash flow. So just want to kind of explain that, guys, is we got to think about what makes sense there. So as I tie that back to the financing, when you see financing, guys, we don't always have to put more money down to maybe net even cash flow. And again, for your individual scenario, that's okay. But the key piece for me was saying, hey, if I can put less cash down, it is okay to have a little bit of a temporary cash flow loss because I'm not depleting as much of my cash. So when I look at that cash on cash return, it's stronger. So I know I'm chatting on a lot of different details there, and hopefully you can see the passion come through. There's so many different ways to analyze it, but lean on somebody that has done this before. That is, someone that has multiple rentals or a professional that has this, and say, guys, what is this long-term strategy? And I will tell you, one of the key pieces that helps out is if you have your filter. Hey, these are the property types I want to look at. This is the strategy I want to look on. Fix and flip, hold, turnkey, whatever those are. Be strict on yourself. It's so easy sometimes to get sucked into this deal or this deal or this deal. And I think that's what kind of either has a client make an unfortunate investment that's not good, or to feel very nervous of ever pulling the trigger on investment because it's too vague. If you really dial the plan and let that use it as a filter, then that way you'll know, hey, it checks X, Y, and Z box. I'm comfortable with it. So those are some key pieces, guys, we want to flip through. Now, again, as I mentioned, leverage can be a good thing. The key is just managing risk. I don't want you to put a zero down loan. Now, those don't even exist for rentals, but obviously we saw that in 2008. So there's always got to be a balance to this. Personally, I typically find myself doing about 25% down. I like to keep around 25% equity in properties. But by having that leverage, I'm able to go buy more and more properties and let this overall growth expand much faster than if I was trying to buy something in cash per se. So use it wisely. Again, have a plan to say, hey, how much am I going to leverage versus not? And the last big piece, guys, manage your reserves. As you have more and more properties, there's more roofs, there's more things that can eventually need repair. That is okay if we build it into the plan and we budget for us. So again, as you're scaling, having reserves as a fallback tap into is going to be key for you. So guys, thank you for the time today. This is just kind of scratching the surface on it, but it's an amazing opportunity. Think about, again, anything you've owned over the years, how much has gone up. What if you had 2 of those or 4 of those or 5 of those? How much more appreciation could you have earned? Now, there's plenty of ways to do this. Even if you don't think you can afford it, be surprised. Most clients can if they want to. So feel free to reach out. Oftentimes we do seminars as well, and we're happy to chat through it with you. Thanks.